For us to know where we're going, we have to understand where we currently are. Welcome to Coffee Infused Crypto. On today's episode, we're going to discuss Bitcoin, check what happened earlier, all the hype, the markets are all bullish now. Yeah. So we're going to go dig into Bitcoin on the macro, micro, and try to realize or understand how are we moving forth from now on. So grab your cups of coffee, make sure to give this video some love, and yeah, let's deep dive into Bitcoin. This is, as you know, sometimes we utilize naked charts just to focus and understand where we are currently. And as I've always said, any move to the downside from now on is a discounted buying opportunity. This time I was right. And all this hype that you see in the market is this green tiny candle. Imagine we had something like this, or like this. Or what about those 3-4 massive green candles? Or what about those dozen green candles? The potential of the market, and especially Bitcoin, is endless. There's a huge potential, and we have to understand that we, on the grand scheme of things, are still way undervalued. So don't dig into the 15-minute charts. Don't drown yourself with the micro visions and lose this whole macro scene. With that being said, our 200 weekly moving average held us perfectly. We closed the week green. We initiated a low here around this area. Actually, we initiated another week at around this area, and now we are retracing a bit. But on the grand scheme of things, what I'm interested about is the 200 weekly alongside with the 20 weekly, two moving averages that we have already discussed, held us perfectly. And this wick right here, this wick, see it? Can you see it? Can you see this wick? If you bought around those areas, you had a discounted Bitcoin. If you took advantage of this, then good for you. We were respected by those two moving averages, and we were halted at around this area. But what is around to this area? So first, to understand what is around this area, we have to go to the daily, still on the naked chart with moving averages. So as you can see, the 50 daily moving average is right exact on this area. This is where, based on moving averages alone, we got stomped currently. Okay, so we're gonna follow up this move right from where we started on the micro, but I'm taking you to the macro levels, and then we're gonna shift to the micro level so that we understand how we got here first and what stopped us. So we were held by the 100. All right, orange moving average, yeah, dipped below it, closed the day below it, and then regained it. This is the market. These are the markets. It's not straight lines. It's not perfect. We will chip shop. We will break some lines, but what we are interested in is the closing of each time frame. The close of the daily candle, the close of the weekly candle, the close of the monthly candle, and so on and forth. All right. So if you notice this massive green candle, which speaks volumes, it starts at the 100-day moving average and it stops at the 50-day moving average. So we are trading between those two moving averages. The 100 is at 26,800 and the 50 is at 28,102 and 50. So what happens when we take the 50 moving average? On the daily, from a daily perspective, This is when we were held by the 100. And this is when we took the 50 and the 20. Now we are over the 100 and over the 20. And this is the what happens when we take the 50. Something like this. If we go a little bit, see here, rejected by the 50, rejected by the 50, breaking the 50. 1 day, 2 days, 3 days. This is what happens when we break the 50. 50 and the 20 are two very powerful moving averages. Okay, and the reason why we see them more often is because they're lower in time frames. So they catch up faster. The 20 catches up first, and then the 50 acts as a buffer. And here we already peaked and pierced the 20, and we were stomped by the 50 daily. So keep an eye on those two moving averages on the daily time frame. Okay, what happens if we break this daily time frame? I'm gonna take you to a chart that you will start seeing a lot current now. We're gonna remove the moving averages. So everyone will start talking about this chart now, and you will know it because we did talk about this chart way before, and I still have it. And as soon as I flip this, you will understand what chart I am talking about. So this is on the monthly, and this is how we look on the monthly. We are currently still above the 0.382 Fibonacci from the current all-time high to the lows. And we discussed earlier, like a couple of months back, that breaking this will trigger us into taking those levels. And if we were to look to history, we would have something like this. Our breakout, taking the levels and topping out at the 0.786 Fibonacci to 0.836 Fibonacci. That was the peak of this move here. And that would be $50,000. So we said we are on track of breaking each and every Fibonacci level, the 0.382, the 0.5, the golden pocket, and to peak at the 0.786 as a target if we were to be looking at history and rhyming with history. So what happened 2-3 months later? We held the 0.382 as a support. That's everything that happened. When you go like a couple of years later in the future, look back at today, at this month, at the past 2 months, all you're gonna see is a doji candle green and another candle which you don't even recognize on the chart. Just one more candle between many. But within the micro scale of things, people get tracked, people are millionaires, a lot happens within those candles. But if we zoom out, we realize that yes, we did confirm the 0.382 as a support. And from here on, we move forward. And by forward means if we didn't break to the downside, then forward is either sideways or up. So, to deep dive on the lower time frames, let's go to another chart here and tell you exactly what happened. So we're going to utilize, let's utilize, which one? This one. So yeah, we're going to utilize this chart. We're going to go on the 4-hourly, and I'm going to show you exactly how are we moving currently and where do we expect ourselves to be in. So what happened first, if you realize this chart, by the way, this is, I'll show it to you on the weekly. Yes, our parallel channel, which from, let's zoom in here and check. Yeah, we didn't close the week outside of this, and this week opened around this area. So technically we never had a full week close outside of our parallel channel. So from a weekly perspective, we're still in the channel. That's why we said we need to see how the week will close. And it closed well within our parallel channel. We never closed the week below it. Thus, this is still valid. Thus, we build up on it. So, to look on a 4-hourly time frame to understand, this is what happened below the purple support of our parallel channel on a 4-hour candles. So, this is the blip to the downside. But what happened is we formed this descending triangle where we broke to the upside, and that initiated a parabolic move, which if we want to take the technical perspective of it, which the move is still ongoing, by the way, that would be the move from this to this. So that would be the move, and we broke from here, right? So that would be the target area. $29,000 is the target area. What happened? First of all, we were stumped by our parallel channel on the way up, and that validates that this parallel channel support is so much alive, because support, resistance, support, and currently support, right? So this is the first stump, but definitely we pierced through it, as you can see here. And on another perspective, or on another level, as we see on the daily, we got stumped by the 50-day moving average, which is aligning by this trend line, which is the descending support from this. See here, that's where we got resisted, rejected again, and currently rejected. So if we look at this from this perspective, what do we have, or what do we see? We see a trend line going to the downside from here, and we see a trend line supporting us from the upside from here. Thus, we connect 1 plus 1, we have 2. So we are expected to be moving between this triangle until we have to decide whether we get rejected and break to the downside again, or to the upside and continue our journey to the target of this breakout from this triangle here. So in which direction, we have to wait and see. It's a probabilities game, but knowing where we are, what hurdles do we have, what targets do we have. So the 29,000 is the first. And the second, I'd say that it's the middle of the parallel channel, which currently sits at around 32,000. So the longer we stay here, the higher it tends to go. But even if we wanted to even go lower on time frames, or go to, let's go to the hourly, and let's see this move to the downside currently. Should we panic? What happened here? If we take the Fibonacci, go from our lowest point to the highest, sorry, yeah, let's go from the highest point to the lowest point. So if we are moving to the downside, right? So let's discuss both scenarios. So if we're moving from the downside currently, so this is the lowest point of the move, and then we came back and retested what? The golden zone, right? So are we gonna go to the upside? Currently, no, we got rejected. We got hard rejected. So this attempt failed, right? So now we either get supported and retry another attempt, or we get failed on this and move to the downside. But if we take it from the different perspective of our upside move, so we're moving from the downside to the upside, what's currently happening is on this initial move to the upside, and let me just adjust it just right. So you can see that from the downside to the upside, we had this initial move to the upside parabolically, got accepted back into our trend line, and we tend to always come back and revisit the golden zone from the upside and from the downside. So if this supports us now, this will initiate another move to the upside. It all is very simple. It's all on probabilities and perspectives. you gotta see all aspects. If we're moving from the upside to the downside, and or if we're moving from the downside to the upside, and vice versa. You know what I mean? I got messed up, confused here. So yeah, knowing both supports and resistances will help you. So currently we are in a very normal trend of us going up, retesting our golden zone, going back up maybe, third attempt to retest this. If this breaks, we continue. Top of our zone would be the level 1, which is 28,451. Second would be 29,000, as we said, from the triangle below. So those are the upside moves. As for the downside moves, and if we fail this golden pocket and we fail this, then we have to get back to our previous downside supports, which has not changed so far. So we will be going back to 26,780 and 26,500, those two levels which we moved alongside, and the weekly 200-day moving average, which we're gonna flip now and check where it is currently at. So let's turn this off. Weekly is at 26,360 and 52. 26,352. The 20 week is at $26,045. Those are your targets to the upside and to the downside. That move for Bitcoin is completely normal, completely legit, even with this retracement around this area. I mean, we moved up significantly, so now we have to rest, and that's exactly what we're doing. We're trading within this triangle. Keep in mind, moving averages, mark and write down the numbers. Keep your eyes open. Any dip in the markets within the coming couple of months is a buying opportunity. Don't miss out on it. So that's everything for today, guys. Thank you for tuning in, and I will see you tomorrow. Bye bye.